We just got a new job market report, and it's making the Federal Reserve Bank nervous, but probably not because of why you think. I'll show you. About a week ago, we got the first of two job market reports. It was from ADP, the payroll provider, and they said that the United States economy added way less jobs than expected. This made everybody nervous. Investors got nervous. We saw Wall Street get nervous. We saw the White House get nervous. And even the Federal Reserve Bank was saying this could be a reason that we need to stimulate the economy because the job market might be breaking. But then, just a couple days later, on Friday last week, we got another job market report. This time it was from the Labor Department. And they said that the United States economy added many more jobs in May than expected, which then started to reverse and flip people's opinions. Maybe the job market is not that bad. Maybe the economy is growing. Maybe the economy is booming and we don't need to worry about things. And the reason why you want to pay attention to this and understand this is because you generally cut interest rates as a way to stimulate the economy and stimulate the job market. You generally raise interest rates as a way to cool down the economy and cool down inflation. And the entity that decides if you want to cut or raise interest rates is the Federal Reserve Bank. They're the central bank in the United States. Well, President Trump is very vocal about wanting lower interest rates. He's been calling out Jerome Powell, who is the chairperson at the Federal Reserve Bank. He's been talking about it in many interviews that he wants lower interest rates. And the reason why he says that is because, number one, lower interest rates will stimulate the economy because hypothetically, if mortgage rates were to go down to 4%, you bet more people would be borrowing, more people would be doing refinancing, people doing cash out refinancing, which would mean more money is entering the economy. But the concern with that is it could also make the inflation problem worse. But then if we take a look at Europe, Europe has done 10 interest rate cuts in their current cycle. We, the United States, cut interest rates by 1 percentage point in 2024, and we've cut interest rates 0 times in 2025. And the reason why is because the Federal Reserve Bank keeps saying that we don't want to cut interest rates right now because we're concerned that tariffs will make inflation worse. Now remember, you cut interest rates as a way to stimulate the economy. You cut interest rates to encourage borrowing. And the reason why that could be a concern is because when you cut interest rates, you're essentially inducing inflation. You're creating inflation because more money is entering the economy. Think of it this way. If mortgage rates go down to 4%, you're probably going to see more housing buyers enter the market. If more buyers enter the market, home prices could then go up. Why? Because now more people want to buy that thing. So you can start to see how lower interest rates can make inflation higher. And this is where the Federal Reserve Bank is saying, if we cut interest rates right now and tariffs make the prices of things higher, we could potentially make this inflation problem a whole lot worse. So we're going to hit pause. And this is where we're starting to see a lot of clashing of heads between the president, the White House, and the Federal Reserve Bank, because President Trump wants lower interest rates to stimulate the economy, while the Federal Reserve Bank is saying, we don't know what's going to happen with inflation, so we're going to hit pause. And this has, number one, the Federal Reserve Bank concerned with all the things that are happening now. And number two, it has investors unsure about what's happening and what's going to be coming. Now, this is something that we've been covering in Market Briefs. Again, Market Briefs is my free financial newsletter where every day my team is working to break down what's happening in things like the economy, housing, stocks, crypto, and the global markets into a fun, witty, and easy to read newsletter. We have hundreds of thousands of investors that read Market Briefs every morning. Plus, when you join Market Briefs, you'll also get access to my investing masterclass, where I break down how you can start investing and find investment opportunities before everybody else. Market Briefs and my investing masterclass are both free. So if you want to get that all for free, all you have to do is click the link down in the description below. Now, when we take a look at investors, because I want you to understand why this matters for you, because changing of interest rates will impact the stock market. It will impact housing prices. It will impact a lot of things in our economy. So when investors are looking at what the Federal Reserve Bank is doing, right now, investors are essentially saying that when the Federal Reserve Bank meets in June, they're meeting in June 17th and June 18th, and they're going to announce if they want to cut interest rates or not. Investors are right now saying the Federal Reserve Bank is probably, very likely, not cutting interest rates in June. Maybe they will in September, but June, no chance. That's what Wall Street is saying right now. And the reason why, I'll read you directly from one of the Fed presidents, is this, quote, "While the tariffs are likely to push up prices, the extent of the increase is not certain, and it won't be apparent for some time." Meaning, we, the Federal Reserve Bank, think that tariffs are going to make inflation worse. How much worse? We have no idea. That's why we don't want to cut interest rates. President Trump then responded to the Federal Reserve Bank saying, if inflation comes back from tariffs, then you should raise rates to counter them. Very simple. That's what President Trump posted. Now again, let's go back to the investor. Why does this matter? Because at the end of the day, our economy runs on spending. And the more money that people spend, the more the economy grows. If interest rates go down, more people will have access to more debt, which is a form of money to be spent. And that's why investors are paying attention to this, because if interest rates go down, more people will probably refinance, more people will probably buy houses, more spending will happen, which could stimulate spending, could stimulate the economy, could stimulate the stock market. And this is where you want to kind of balance two things. The Federal Reserve Bank will either cut interest rates if enough time goes by and the economy stabilizes, or they're going to cut interest rates if a recession happens. Because if a recession happens, that means that our economy has slowed down and now the Federal Reserve Bank needs to stimulate. Which one is it going to be? Is the Federal Reserve Bank going to cut interest rates due to a recession, or just due to, all right, we waited it out enough, now we can cut interest rates? We don't know which one is going to be. But at the end of the day, there's a lot of people out there that are now trying to bet through their quote unquote investments based off of what they think the Federal Reserve Bank is going to do. And this is where my goal for you is to be a smarter investor, to understand how you can find the opportunity no matter what's happening. Because at the end of the day, nobody knows what's going to happen in the White House, whether it's with Trump or Elon Musk or anything else in between. Nobody knows what's going to happen, so I don't recommend you try to predict that. Nobody knows what the Federal Reserve Bank is going to do. Sure, you can predict, you can look at all the numbers, but nobody knows for sure. But what we do know is that the way you build wealth over the long term is not by becoming a day trader or trying to trade on this news. That's gambling, that's betting, and a lot of people get caught up in the headlines and the news and the emotions, and that doesn't really do a lot of good. What you want to do is have an investing strategy that will allow you to win no matter what happens. And the way that you do that is to understand that markets over the long term go up, period. We don't know when the next recession is coming. We don't know when the next market crash is coming. We know that it will come. I don't know when. Maybe it will be under Trump's term. Maybe it won't be. Nobody knows. Recessions are a part of our economy. Market crashes are a part of our economy, period. But if we take a look at the stock market over the long term, so we take a look at it over a course of 10 years, 20 years, 30 years, 50 years, what you'll see is the longer out you go, you start to see that markets go up. Yes, there are these ups and downs and ups and downs. 2020 was a big down. 2008 was a big down. 2000 was a big down. But over the long term, despite those big downturns, markets go up. And this is why Warren Buffett always says, time in the market beats time in the market. Yes, we will see a recession. Yes, tariffs create uncertainty. Yes, July 8th, which is when we're going to hear the next announcement of tariffs, is probably going to create a lot of craziness in the markets. But instead of trying to predict what's going to happen, how about you just work to accumulate assets? That means buying. And then when you see that downturn, because we're going to see a downturn, it's going to happen. I don't know when. We've already seen like 3 essentially bear markets happen in 2025. The first time we saw it was in February when President Trump first announced tariffs. Then we saw it in March when the tariffs were reinstated. And then we saw it again in April during Liberation Day. Each one of those created great buying opportunities for those of you that were buying the dip. But we don't know what's going to happen again. And so if your goal is to accumulate good assets, you study what are good opportunities. You buy those. And then when things go down, those are opportunities to buy even more. Well, now what you're doing is you're working to grow wealth because you use the downturns to take advantage when people panic, and you keep accumulating when times are okay because you are smart with your money. You're budgeting with your money, so you always have money to invest, period. And so it starts psychologically. I can't spend all of my money because I'm gonna be smart with my money and I'm gonna put money aside to save and invest. That's hard. Once you do that, the next hard you have to do is figure out, how do I actually invest my money? What do I invest in? Now, some of you are gonna be more involved because you like researching. You like to stay on top of what's happening in the markets. This is something that we publish at Briefs Media. We have a product called Briefs Pro. Some of you are probably subscribed to it, where my team of analysts are publishing reports on where money is moving in the economy, where the next opportunities might be over the next number of years. Our analysts are breaking that down. That's what Briefs Pro is, but it's not for everybody. Other people are gonna say, we just wanna invest in the S&P 500. I just wanna invest in the total stock market. That's great. That's another winning strategy. But at the end of the day, a winning strategy requires you to continue investing your money and understand that there's gonna be ups and there's gonna be downs. And you have to understand that, period. But it requires the first mental understanding of, there's a lot of crap in the world. I'm gonna put aside all the noise. I'm gonna then budget my money, and then I'm gonna invest my money, and I'm gonna keep investing even with this craziness happening, because there's a lot of craziness in the political world right now. People are trading based off of that. When the whole Trump and Elon Musk feud happened, the first thing that happened was Tesla stock crashed, and then it bounced back up. Who knows what's gonna happen in the future, but I'd rather not gamble on it. I'd rather work to own good assets and keep accumulating. When those good assets fall, buy more. But you have to know your strategy, and you have to have the money to invest, and they gotta be able to cut through the noise, because a lot of people get very angry, they get very emotional, they get very political, but guess what? It doesn't matter if you're on the red side or the blue side, money is still green. So you can figure out if you want to play politics or if you want to play investing. And if you want to play investing, you got to put aside the emotion. And with that, I will see you on YouTube tomorrow.